Expectations from the budget to be tabled on 1st February 2020 from an individual tax perspective. So if you were to ask me my top 3 expectations, the first one, of course, as it is being talked about all around, which is liberalization of personal income tax rates. Of course, it's well known that with a likely shortfall of 55,000 crores in collection of personal income taxes itself for this continuing fiscal year, there is very little fiscal room for the government to make this change. Yet, because of the commonly held belief that it will help spur consumption and therefore drive demand in the economy, it is most likely that it will happen. What remains to be seen is how it will be done. Given that the government needs to balance its social equity perspective as well, what is likely to happen is that we will see a change in the tax slabs or rates or possible tax rebates to be introduced so that we don't lose on our tax base as well. Remember, one of the objectives of the government is to continue to widen the tax base. So therefore, we can't afford to lose the number of taxpayers, though they will still have to file a tax return and may be able to exempt their income from tax by claiming the higher tax rebates that may be introduced. So first is liberalization in personal income tax rates. The second one is maybe coming back of the classic system of taxation of dividends, as in dividends as it is done across the world to be taxed in the hands of the shareholders, as against the current system of dividends being taxed in the hands of corporates as dividend distribution tax. When it becomes a classic system of taxation of dividends, it's also creditable tax, and foreign investors will feel encouraged because then they will be able to get this exemption back home. Third thing one expects is some sort of a rationalization of the long-term capital gains tax. It's been talked about every successive budget. The period of holding for long-term capital gains tax differs for equity, differs for property. So there may be some sort of rationalization that make 24 months a common period of holding for long-term capital gains tax to be attracted, and maybe a common rate of tax versus 10% to 20% as is currently seen. So these are my top 3 expectations from the budget.